Hello everybody, this is Brian Tika and welcome to my YouTube channel. So today I'm just going to be talking about um, how the market has affected my portfolio and some of the news that's come up today, May 14th, 2020. And as you can see here, based on when I bought AT&T and how much I paid for it, these have been my returns or based on market gains. And as you can see, AT&T hasn't done very well, but I've had a few of these stocks here that's really increased based on the market. But at the end of the day, we're not really looking at the market gains. We're looking at dividend yields and our cash flow, understanding that we won't be receiving any dividends or cash flow within the first month. After that, we're going to be looking into which companies are providing this cash flow for our portfolio. So I'm going to go ahead and scroll back up so you guys can see on what my portfolio is looking like right now. And I'm going to go ahead and dive into some news. So there's this article by New York Times about how poor Americans hit hardest by job losses amid lockdown. So I thought this was very interesting just because I don't think anybody foresaw this actual fact that poor people would be hit the hardest within the during the lockdown or during the pandemic. Like the fact that people are writing an article about how poor people are hit the hardest just seems like a disconnect between um, the people in the people who are writing these or people who are doing edits and the actual working class. Like, come on, like this is so obvious, and I understand that we should definitely get exposure about how the lower class is taking a huge hit during the pandemic, but I feel like this article is just more bad news. We're gonna go ahead and use Seeking Alpha, and we're gonna be talking about just some of the news that they've provided me through their platform. One of them is here as this article, banks bounce back. Um, so here we're looking at how I was talking in the last video about how financial sector is extremely exposed during a recession due to the fact that their whole um, industry or sector is just consistent with giving out loans or creating financial instruments for people to use, or the fact that it relies on people spending money or um, taking out loans instead of saving or not going out into the market or going out to outside and actually using the money they have. It's foreseen that the banks are gonna suffer significantly. And here it says that the financial sector index XLF Spider has was on track for a 3-day 7.3 decline, and today that bounced back just a little bit, showing a 1.1% rise. We do have Bank of America and JP Morgan and Chase within our portfolio, and you can see here that today they've risen 2.4 and 2.8 respectively. And I think this is good news, but I mean, we'll see. There's still some time left in the quarantine. I know some states haven't quite opened up yet, but we'll see when the market comes back, and hopefully it doesn't take that much time to recover. But um, we'll be looking to see how this actually affects our portfolio. So the next article I want to be talking about is this JP Morgan US credit card users spare spending by 40% due to pandemic. So this is kind of foreseen just because people aren't able to go out and actually spend their money. They're forced to stay inside, and quarantine. And I'm not saying this is a bad thing. I think it's necessary, just um, in my point of view, just because I work in the medical field. um, I don't know. I feel like that is necessary to do quarantine, but you can just see how the economic structure is just um, breaking down right now due to the low traffic of spending within the market. Some good news within all that bad news that I just talked about, but one of my stocks that's in my portfolio is Johnson and Johnson. It's a fairly big share of my portfolio, holding 7% allocated to this stock itself, Johnson and Johnson. But upcoming dividend increase anchored by Johnson and Johnson. So this article talks about how Johnson and Johnson has been continuously increasing their dividend yield. Johnson and Johnson has delivered 6.3% increase over the past 58 years. Talks about how good of an investment Johnson and Johnson is in long term. So we might not be seeing like the market gains or the day to day or like week to week increase in the stock price, but we do see here just that Johnson Johnson has been consistent in increasing their dividend yield throughout. And one of the last articles I want to talk about is this announcement from Microsoft that they just made an agreement to acquire MetaSwitch Network, which um, based on cloud and communication networks, presents a unique opportunity for Microsoft to serve operators globally via continued investment in Azure, adding additional depth to our hyperscale cloud infrastructure and specialized software required to run virtualized communication functions. This acquisition is just to help them with telecommunications. I'm gonna have to look a little bit more into Metaswitch and what this deal costed Microsoft. So they did announce that they made this acquisition, but they didn't release how much it cost them to acquire this company. So we'll see more into the future when they announce a little bit more information about this trade. But for today, that's all the news I'm going to be looking at. Um, and hopefully next week we're going to have a little bit better news. And again, we're going to go ahead and look at our holdings and what our portfolio is going to look like. Don't forget to like and subscribe to my channel, and leave any comments or email me any questions or suggestions, and I'd love to reply to them. I know on the last video, I think the comment section was disabled, so I'll look into that and how I can enable it and allow my viewers and subscribers to leave comments. Alright, until next time, thank you. Have a good day.